Gold mining companies with a strong balance sheet and free cash flow upside visibility. These are the gold stocks to buy for healthy dividend growth as the precious metal trends higher. Newmont Corporation, investment grade balance sheet and healthy upside likely in free cash flows for 2023 on higher realized gold price. Barrick Gold, 72 million ounces in gold reserves and an attractive all-in sustaining cost. Kinross Gold, a robust liquidity buffer of $1.8 billion and free cash flow likely to be over $700 million. Let's dive in. Here are the 3 gold stocks to buy for dividend growth. Welcome to Timely Investment Research. Gold has been among the performing asset classes in the first quarter of 2023. The precious metal trades above $1,950 an ounce and looks strong for further gains in the coming quarters. With the upside in gold, investors can look at some attractive gold stocks to buy. Before talking about gold mining stocks, let's briefly discuss the reasons to remain bullish on gold. The crisis in the financial sector is a major reason, as investors seek refuge in safe assets. Inflation has been stubborn, and a recession seems likely. All these factors support the bull thesis for gold. I'd also believe that central bankers might shift to expansionary policies if there is a deep recession. This scenario seems likely in the second half of 2023. Expansionary policies would imply a weak dollar and a rally for gold and other asset classes. It's therefore a good time to consider exposure to gold stocks that are trading at attractive levels. These stocks are poised for a meaningful rally, and I also expect healthy dividend growth in 2023. Let's take a deeper look into these gold stocks to buy. Number 1. Newmont Corporation. With a recent upside in gold, Newmont Corporation stock is higher by 19% in the last 6 months. Newmont Corporation stock trades at an attractive forward price-earnings ratio of 22.8 and offers a dividend yield of 3.3%. Newmont has an investment-grade balance sheet and ended 2022 with a total liquidity buffer of $6.7 billion. Last year, the company delivered free cash flow of $1.1 billion. If gold trades near $2,000 an ounce, I believe free cash flow is likely to be around $2 billion. Therefore, Newmont has headroom for healthy dividend growth in 2023. Looking beyond this year, Newmont has a robust asset base with 96 million ounces in proved reserves. The company expects to sustain stable production through 2040s. Assuming a scenario where gold remains in an uptrend, the company is a cash flow machine. Further, Newmont expects to lower all-in sustaining cost in the coming years. Even with sideways gold price, the company will be positioned to report healthier earnings before interest, taxes, depreciation, and amortization margin. Number 2. Barrick Gold. Barrick Gold stock is another quality name among gold stocks to buy for 2023. The stock has been in an uptrend in the last 6 months and offers a dividend yield of 2.2%. As an overview, the company currently has 6 Tier 1 gold assets with a reserve base of 72 million ounces. A robust asset base provides clear cash flow visibility for the long term. Last year, Barrick Gold reported $3.48 billion in operating cash flows. For the current year, I expect operating cash flow in excess of $5 billion if gold remains above $1,900 an ounce. The company is therefore positioned to increase shareholder rewards. An important point to note is that Barrick Gold has guided for an all-in sustaining cost of $1,170 to $1,250 an ounce for 2023. If the ASC remains around these levels with gold trending higher, significant margin expansion is likely in the coming years. Barrick Gold stock is therefore attractive even beyond 2023, and with a strong balance sheet. Share buyback is also likely to remain aggressive. Number 3. Kinross Gold. Among smaller names in the gold mining industry, Kinross Gold looks attractive. Kinross Gold stock has trended higher by 34% in the last 6 months and offers a dividend yield of 2.7%. At a forward PE of 17.3, the stock remains undervalued. In terms of business fundamentals, there are 2 important points to note. First, Kinross ended 2022 with a strong liquidity buffer of $1.8 billion. Further, the company reported free cash flow of $157 million for fourth quarter 2022. Considering the upside in gold price, Kinross is positioned to deliver free cash flow over $700 million for 2023. Another key point is that even with some asset sale in 2022, Kinross has a stable production visibility through 2025. With cash flow upside coupled with production visibility, Kinross is positioned to increase dividends and pursue share repurchase. I would also not be surprised if the company pursues inorganic growth. This will compensate for the sale of Russian assets for geopolitical reasons. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.